Hey family, hey friends, what's going on? This is not financial advice. Y'all know I gotta say that. I'm just here to try to help you change your life. Any moves you make in the stock market, any investment decisions you make, be sure to consult with your broker, whoever they may be, because with investing carries risk, and I don't want you to lose any money that you can't afford to. So my motto is if you invest or you put money in the stock market or you're trading, just invest with money you're prepared to lose. That way, if you do lose it, which I hope you make good decisions and don't lose any money in the market, because if you do make good decisions, you won't lose any money in the stock market. With that being said, let's go. I got three plays that I want you to put on your radar. The first thing I want to do is share some market psychology with you. The best time to make a trade is when you don't need to make a trade. And I'm saying that to say, if you're making a trade under duress, if you're desperate, if you're under pressure to make money because you need money, then it's not a good time to be trading. It's the wrong time to be trading because everything can go against you. You'll make bad decisions. You won't follow your rules. You'll just be pressed out. So if you if you're secure where you're at and you're investing and you know what you're doing or you're trying to learn what you're doing and you're making safe trades and putting your money in the right places, then you have everything to gain and nothing to lose. And you have myself, and there are a lot of people out here that will help you navigate these markets, but you got to find the right people. You got a lot of people out here that's on butt and ain't talking about nothing. They're trying to get you to subscribe to this or subscribe to that. They start out with one thing and then steadily try to get you to spend money with them to help you make money, but what they can't help you do is execute. No one can help you execute a trade. You have to learn how to do that on yourself. You have to understand the psychology behind it, because I've made every mistake you can possibly make in these markets and have lost a ton of money making them. If they call it paying tuition, well, I should have a doctorate degree if that's the case, because I've paid a lot of tuition to get to where I'm at today. And without asking for anything, I want to help you make some money. So the first stock I want you to put on your radar is HIMS. This is my number one stock. I'm gonna go one, two, three. HIMS is a telehealth stock and telemedicine, online doctoring and stuff like that, dealing with sexual dysfunction or function, however you want to put it, uh, weight loss, hair loss, all those things that are real popular and real big out there right now. They've been beat down based on fear, but because of that means the upside is huge. If you look at it, HIMS was as high as 70.43. I think that's the 50 72.98, 52-week high. And now we're down here right around $40 area. And it was even lower than that. It dropped as low as $32. So that means we got a lot of room to come back up. And I'm here to tell you, because HIMS is a small cap stock right now, and the small cap stocks are gearing up for a come up. And I'm telling you that because if you just do some research, just look this up. Look up the fact that the central banks are pausing or putting a halt to interest rate hikes all across the globe. Not just here in the United States are we not going to raise rates. They're either going to pause rates, keep them the same, but the right now the sentiment is that the rates will be cut at least 25 basis points, and that's my belief that they'll drop rates 25 basis points. And coming December, that December rally, Santa rally is what they call it. It's going to pop off, and when it does, you want to be in the right places and the small caps and the mid caps, IWM. If IWM starts taking off, it's at about 250 right now. Then get ready for these small caps and HIMS. If HIMS can make it over to 45, get back up to 45 area, right around here, right here for it. We get up here to 45, then him is probably good to make it to 60, $65. So just put this on your radar. And if it gets over 45, I may even play option on it. I'm not sure. I don't really like playing small caps or mid cap option, but this is one I want you to put on your radar if you do. The next one I want you to put on your radar is Duolingo. Duolingo has been beat down so bad, but Duolingo also has a ton of upside. It's probably down 50%. Duolingo was way up here in the $500 area. 544 is 52-week high, and it's way down there. it was down as low as 166. It's back to 191. So what Duolingo, of course, Duolingo is a language interpretation app, helps you learn different languages, and they're getting off into other things. They got AI working in Duolingo's platform now, and if you see the trend change, then it could be a slow grind to the upside, but it'll be a safe play to the upside because the downside is limited. So keep Duolingo on your radar. If it gets around this 200, if it can get to 200 and get through that $200 area, look for it to go up to 220, 240. So keep this, like I'm saying, keep this on your radar. Also, it's like I said, it's been beat down. It's gonna be and I use Duolingo, and I actually think it's awesome. I try to speak a little Spanish, como estás, and and Duolingo is part of the reason that I can speak poquito en español. So keep that on your radar. I believe it's a good play, so something for you to watch. And next, I'm gonna put a play on your radar that was already on that I put on there before. I don't know who was listening, but if you were, we were at 106, and immediately we went up. But last week, the little beat down came. They got took a red day or two, just like everything else, and came all the way down into the 90 area. So 98.04 it came down to, but then it went back up. Back up. It opened up Friday at 102 after the holiday, made it all the way back to 109. After hours 111. When I first told you about it, it was 106. Told you about the energy play, and the energy plays are about to get hot. Not just BE, but other energy plays are about to get hot. This is just the one that I'm looking at because of what they do and the service that they provide. BE is going to be looked to make some the fuel cell energy plays really massive because everybody's going to. They've got a $5 billion contract with Brookfield that builds BE infrastructure. So if it transitions into profitability, BE will be back up there to the 130, 140 area pretty soon. So BE, where's my price targets? I got a price target on here for BE too. If we get over 109 to where we're at now, 111, I'm looking for 115 next. Get through 115, I'm gonna look to 130 to back up here to the 52 weeks high at 150. So keep this on your radar. And I'm not basing this just based on my 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 fundamental analysis, which is what I have right here, but the technical analysis, which is what I'm showing you on these charts. Every play that I showed you on the chart that was up here and was beat down is now trending back up. Look at the chart, chart it yourself, look where it's going, and get in here and make some money. Like I said, the central banks are pausing rates all over the world. Money is getting ready to flow into the economies all over the world, which means money is going to flow into the markets. So the thing that I like to trade is a SPY. So before I get out of here, I'm gonna tap on this SPY a little bit and let you see what this is doing. While everybody is saying crash, bubbles are bursting, look what the SPY is doing. SPY is ticking back up. SPY will probably be 700 soon, and it may make it even closer to 800 before the year is out. You never know, may and if not into let me take that back. Let me come back, not before the year is out, but in 2026 we're going 800 on the SPY. So mark my words. I said it. 2026, the SPY will go. I think the SPY 2026 is going to be a great year, and I plan on making a lot of money. And I'm leaning towards trading just only the SPY because I watch it and trade it so much now. I'm learning that less is more when it comes to trading the stock market. Just like less trading, more watching, less, less. So keep these plays on your radar. Stay tuned, like and subscribe because the more comfortable I get with explaining and sharing what I'm seeing on these charts and in its fundamentals, the more I'm going to be able to produce this content that's going to be more and more valuable. And it's going to help more and more people make money. So stay on the team, stay with me, hit that like, and I'll see you in the next one. Peace.